and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we have recovered from the day's low, but we haven't recovered further. So we have the Nifty, which is just about down around 172 odd points, mid-cap index, which is underperforming a tad bit along with the Bank Nifty. So the mid-cap index is down close to around 450 odd points, and the Bank Nifty is lost around over 450 odd points at this point in time. We do have a lot of queries lined up in the next 30 odd minutes, so let's get going on that. We have Rajat Bose joining in to talk about the technicals, Sharad Avasthi to talk about the fundamentals. Rajat as well as Sharad, welcome to the show. Well, Rajat, before we kick off the show, a standard question in terms of what your, analysis is on today's trading session, the fact that we've seen a dip, it's been bought into, but we're not seeing a further upside.
Good afternoon, Ekta and Sharad, and thank you for having me on the show. To talk about the Nifty, I would say that Nifty today has posted a new all-time high, 24,461. In fact, it is very close to the opening as well. So this is kind of an opening marubozu in candlestick terms. That means it's a shaven head. But what is more significant is that it is also becoming a bearish engulfing pattern. And this bearish engulfing pattern actually taking into yesterday's as well as the prior session, day before yesterday's session is engulfed within it. It is a bearish pattern, yes, but we have seen that these bearish patterns do not give much effect. So what I'm looking at is the 9-day exponential moving average, which is currently located around, say, 24,200. Unless that gets taken out decisively, I would say that we need not worry so much. And it will be really weak only when you see the 20-day moving average at 23,885 gets taken out by the Nifty. Only then think about any kind of a sustained correction or something. Otherwise, it's just a course correction because the 9-day has not been touched for the last several sessions, maybe 8 or 9 sessions. That's why it was par for the course. Regarding the Bank Nifty, I would say that on the downside, if 52,000 mark is taken out, then there would be further fall, and 51,700 might be the next target. And only when 52,600 to 52,700 needs to be taken out before we can think of 53,000. Bank Nifty is slightly weaker compared to the Nifty, but it's not something that we need to be that worried, because the SIP-led money, the have money will buy brigade will continue to buy irrespective of one-day corrections.
Okay, all right. Rajat, thanks very much for that. Well, let's get in now some queries to answer. The first one is Preetam Mehta, who writes to us from Surat. He holds 30 shares of Zydus Life, which he's bought at 876. He wants to know whether there is a possibility of more upside for Zydus Life. So currently he's sitting on a profit at this point in time. 876 is his buy price. 1159 is currently where it's at. Well, Sharad, what would you recommend on Zydus Life? Do you think that there's more upside from these levels on this particular stock?
Yeah, temporarily you might get some upside, but I think most of the swing is more or less over. Next 2-3 years, the numbers are expected to be flat unless and until some of the drugs they are working on, something comes out as a blockbuster drug and they can convert it into sales. But as we know that frontline R&D converting into sales is a slow process for most pharma companies. And so they have some product concentration risks as well in terms of the products in the US, where they are facing some competition in some products. And if some other competition just crops up in some of the other products, their numbers could be negatively impacted. So I think pros and cons both are there. But in terms of earnings, what we are looking at is a flattish kind of earning trajectory over the next 2-3 years, wherein you could expect, 44, 45 kind of earnings. And based on that, I think optimistically, you can use the rally of the next, say, 10 to 15% to gradually exit the stock. I think at roughly 25, 26 times, 30 times roughly, it becomes fairly to fully valued. I don't see much upside from current levels. But optimistically, since the markets are good, I think there is a possibility that it oscillates to a higher P band. So you could have a 10 to 15% rally from current prices. So you use it in a staggered way to get out of the stock. I think that would be fully valued at that prices.
Okay, all right. Well, it's been a rank outperformer. It's up almost 100% in the past 1 year or Rajat. So technically, do you see further upside in Zydus Life?
Yeah, you're right. In 1 year, it has doubled, and in 2 years' time, it has tripled. It was at 400 2 years back, and now it is 1200. But I would say that, yes, it has been a parabolic run. It has been pretty strong movement over the last 1 year, especially the last 1 year. But I would suggest a stop loss below 1000 on closing price basis. And if that happens, only then think of getting out. Otherwise, you should continue. There is no harm as such. No major technical signals are suggesting that immediate downside will be there.
Okay, all right. So that's the view coming in on Zydus Life. Well, just want to point out that for the markets, the mid-cap index is still reeling under pressure. So it's down around 1% at this point in time. We do have a couple of stocks which are managing to hold up. So, for example, we have Emcure, which is really the toast of the market, along with, with a gain of around 35% along with the other new listing. The other couple of stocks which are doing well today is Pfizer from the entire MNC space. Pfizer is up around 6%. It's in fact, done okay this year as compared to the others. It's up around 17% on a year-to-date basis. And Brigade Enterprises is not doing too badly either. So that stock is up around 3% from the real estate space. That stock, in fact, has given returns of 49% this year. So overall, it's turning out to be a market where we are seeing specific stocks seeing some amount of upside. Even hospitals are doing well. So Jupiter Lifeline Hospital is up 3.5%. Fortis is up around 2.6%. So there are these healthcare stocks which are seeing interest in today's trading session. On the downside, it is SAIL, which is down. It's under pressure, so down around 4% currently for SAIL, and even Supriya Life, we've been pointing out, has been under pressure. But now let's cut across to Parikshit. He's in conversation with R.C. Bhargav, who's the chairman of Maruti Suzuki.
Yes, the UP government has taken the step of exempting all hybrid vehicles from road tax and registration fees. So this is a good 10% of the vehicle cost. It's a benefit for companies like Maruti Suzuki, Toyota and Honda cars, which are selling hybrid cars in India. But at the end of the day, this is one jurisdiction, one state, and this is a policy that was implemented way back in 2022, but the clause on hybrid vehicles was not implemented, and this policy also ends next year in October 2025. Joining us to talk about the impact of this policy and whether other states should follow suit is none other than Mr. R.C. Bhargav, the chairman of Maruti Suzuki. Mr. Bhargav, thank you very much for being with us on the program. Considering this policy of the UP government comes to an end in October 2025, that is in 1 year from now, would you be seeking an extension?
Well, I'm sure the UP government will take into account that although the policy was originally framed and I think intended to be implemented from 22, it's actually come into effect 2 years late. And that could be a consideration which they might take into account next year when they're nearing the end of the period of 25.
But would that be your ask to the UP government, maybe a recommendation?
See, we keep working with state governments on these matters. It's not as if it's a one-time activity. And there are many areas which state governments can work on with us, which would help to promote the total industry and create more economic activity everywhere as a result.
Right. The UP government has also called a stakeholder consultation meeting tomorrow. The Mahindra Group, Toyota, Maruti Suzuki, Honda, Hyundai, they're all a part of this meeting. What do you think this has been called for? Are you going to be giving any sort of suggestion to the UP government? Because one point that is being discussed and is there in the circular is that the UP government would like to see if the current policy can be aligned to the FAME 2 policy and kept for hybrid vehicles and electric vehicles costing up to 15 lakh rupees.
There are no hybrid vehicles up to 15 lakh at all.
Right.
Because all hybrids are of a higher cost. In future, maybe vehicles will be developed if conditions are such that the total cost of the vehicle is not raised to levels which make them unaffordable. But at this stage, 15 lakhs means that the concession given gets withdrawn.
Right. So you would actually push for making sure that the policy continues in the present.
You know, Parikshit, we have been looking at the taxation, overall taxation for electric vehicles, hybrids, and of course petrol and diesel vehicles in the EU, in Japan, in America, to find out what is the global practice. You find everywhere the basic taxation, whether it's the VAT or the sales tax, is the same for all vehicles. In Europe, they have this carbon-related tax. And if you look at the total impact of the carbon-related tax, the hybrids pay 1% higher than what the electric vehicles pay. The petrol-diesel vehicles pay roughly 6% higher than what they pay. In Japan, the difference is even less than that, but this is the UP, which is the maximum, EU, which is the maximum. What I'm trying to say is that taxation globally is only marginally different between different categories of vehicles. It's left to the customer to decide what he wants to do. Here, if you look at the basic taxation, is 5% for electric vehicles and from 28 to 43% for cars. Hybrids are 43%. So the difference is 38%. So that also is a factor which I think people need to keep into account, that we are that far different from global practice.
Right. Also, since the time this policy was implemented by the UP government, I am given to understand that it was the starting point was the 5th of July this year. Have you seen an uptick in inquiries and demand for hybrid vehicles?
Too early. Too early.
Right.
We've just had, how many, 5 days.
But how significant increase have you seen in the sale of hybrid vehicles over the last few years? We believe that in FY24 there were roughly 16,000 hybrid vehicles sold.
See, hybrid vehicle sales have gone up. I think roughly today hybrid vehicles are a little bit higher than electric vehicles. Both are pretty low, but there's a marginal difference in that. That's how it is going. The vehicles are too expensive for most people.
But you feel that other states should follow Uttar Pradesh? Are you in conversation with
I
some
think
states?
a number of states have been working on various kinds of changes in their policies to support different technologies. I believe that in most cases, what decisions they took were held up for the same kind of reasons that the UP government decision was held up. But hopefully now that the UP has managed to solve this issue, which has been kind of roadblock, other states will manage to do that, and whatever they have been working at for years now will come out in the future.
Right. So as we move towards electric vehicles and other alternate fuels, what role can hybrid cars actually play according to you?
My view is that if we want, and that's a basic objective of all policy, is two. One is to reduce the imported oil consumption. And number two is to reduce the greenhouse gas emission. And all these policies are ultimately directed to achieve that end. Now, we have to take into account the fact that if you just promote electric vehicles, 80, 90, maybe 70% of cars will be non-electric vehicles 10 years from today. During this period, these vehicles, if they remain only petrol or diesel vehicles, they will have the highest consumption of both oil and emit greenhouse gases. So while electric vehicles have their own place in the system, one has to be realistic and realize that the penetration of electric vehicles is going to be a gradual process and not going to happen that, okay, today we say electric vehicles, 2 years later everything is electric. It's not going to happen. It can't happen. And therefore it makes obvious sense to me that during this period, while we are moving from the start of the electric vehicles a few years ago and moving forward and trying to find cleaner solutions, we should look at how the petrol and diesel vehicles also are converted into other technologies which is not electric, which the customer is willing to accept, and which will result in achieving both the objectives which we mentioned.
Okay, so that is the auto company Maruti talking to Parikshit in an exclusive. But there's an important clarification which is in fact coming from M&M, where they have said that there is no linkage between the price cut on certain XUV 700 variants as well as the UP EV hybrid policy. What they have said is that it is a part of their continuation of their business strategy, and they had articulated this very clearly that they will be cutting prices on Feb 14th when they had an analyst meet, and this will be a part of their business strategy and their annual business plan. So they said that they have to bring down the average price point to drive growth, and this was well articulated at that point in time, and hence any kind of price cut that you're seeing in the XUV 700 is actually a part of their annual business plan and has nothing to do with the UP EV hybrid policy. They do not expect any kind of material impact on their financials, and the demand for the XUV 700 continues to be robust. In fact, they have increased their manufacturing capacity, which is in line with demand, and the new XUV 700 bookings in June were 23% higher than they saw in the month of May. In fact, there's no concern according to them on account of unsold inventory, and they also separately believe that hybrid is an interim and costly solution. So making it very clear in terms of the price cuts that they've taken on the XUV 700, that it's a larger part of their annual business strategy and plan, and nothing to do with the UP hybrid policy. Well, Sharad, this is a stock which is under pressure. It's down close to 7% odd. What are your thoughts in terms of a couple of these takeaways and the clarification from M&M?
Yeah, I think it was not based on this EV thing, but I think in terms of valuation, it has reached a level where it is roughly fairly to fully valued. I think around 3 to 6 months back, when it was just trading at 1500, 1700 kind of levels, it was trading at 15 times forward earnings. The forward earnings did not have much of an expectation built into them. But the recent electric launch has received a very good response, and Thar, etc., have been doing well. I think it is a normal price cut that the company has taken, but I think it's more to do with the valuation and the sharp run-up that you've seen in the stock. So now it is also trading at 25, 26 times. Maybe some improvement happens with the other EV launches. But now you cannot term M&M as something that is cheaper vis-a-vis the rest of the market. So I think it's reached fair valuation 25, 26 times, and within the auto space, most probably all the four-wheeler stocks are trading at similar valuations. So I think it's reached its fair value, and that could be one major trigger that people thought that maybe you don't have much upside level left from current levels over the next maybe 1.5, 2 years. So that is why some profit booking ticked in. But the explanation is very clear that it is not because of some policy change in one state that the company has come up and reduced the prices of its flagship product.
Okay, all right. Important clarification coming there from M&M. The stock is still under pressure, maybe because of the valuation bit that Sharad also spoke about. Well, we need to take a short break, but a quick programming note. Will the RBI cut rates this year? Is the RBI worried about a bubble in the stock market? Is India poised for a GDP upgrade? Coming up tomorrow, a CNBC-TV18 mega exclusive, the definitive RBI governor interview, only on India's most watched business channel. Stay tuned.
सोच रहा हूँ
Welcome back. Well, we have Rajat, Bose and Sharad Avasthi to answer all of your queries. We do have some news coming in line with what Asian Paints did. We have Berger Paints, which has hiked, taken a price hike of 0.7 to 1%. With effect July 22nd. So that is a lot of news which is coming in. That stock, as you can see, is up around 2%. Sharad, before we get to a query, your views on the likes of Asian Paints as well as Berger managing to take a price hike. Crude is boiling between 85 to 86. So that would be one of the key inputs that they have to reckon with. But your thoughts?
My expectation is that the long-term crude prices are not going to go higher, but yeah, temporarily they have climbed to a level which seems a bit high considering the current demand scenario. In terms of their ability to take the price hike, I think after the entry of Grasim and JSW, some murmurs were there that most probably competition would edge to a much higher level, reducing the ability of these companies to pass on the prices. I think this is the first time after a long time that they have taken in some price hikes. Asian Paints, I think valuation wise, it might be just at the starting point from where you can maybe start accumulating in bits and pieces. Berger, I would still not be very positive. I think valuations are still a bit stretched. If I have to pick a bet, I think I like AkzoNobel from the space. They have a lot of coating business, which would be used on the renewable energy side of the business and the industrial automotive also. So I think that is one idea where I have a lot of valuation comfort. A smaller company, Indigo Paints, might also be a good beneficiary. So if you want to go for the larger players, I think you can start nibbling into Asian Paints gradually. Long term, obviously, it's a good bet. It'll manage to maintain market share. But if you're looking for valuation comfort, I think AkzoNobel makes the cut. And if you're looking for a smaller company that can grow leaps and bounds, I think Indigo Paints would be one story you could look at.
Okay, all right. Well, we do have a couple of queries now. Vipul writes to us from Chandigarh, holds 100 shares of ITC, which he's bought at around 310. Short-term investor wants to know what to do, whether to hold or sell. What's your view on this, Rajat?
Yeah, ITC immediate resistance will be between, say, 457 to about 460. If ITC manages to get past this 460 kind of resistance, then 473 to about 476 will be the next target. But this will be a pretty strong resistance, I suppose. We need to see whether it really manages to get past that. And unless it falls below 443, it wouldn't be negative either. So I would suggest currently he should continue to hold on, and let's see how things pan out here in case of ITC, because ITC has a reputation that when the market goes for a toss or becomes very weak, ITC tends to perform. So maybe ITC might be able to get past this 460 levels. Let's see how things pan out.
Okay, all right, Rajat, as well as Sharad. Well, we're going to wrap up on that note. Thanks very much for joining in, taking us through all of those queries. That's all the time that we have on this show. Do email us your queries and your questions. We'll address them with our experts. Stay tuned. Closing bell up next.
Go power.